There we go. All right. Welcome, everybody. This is the Trader Circle for April 2024. For those who are new here, pretty straightforward. Literally just an hour where you have me and you can ask me literally anything you want, and I'll tell you anything you want within reason. Um, for those who may sign up in the future and may not attend, anybody or any question that you want me to answer, I require you that you be present because I want to talk to human beings. I don't want to talk to questions on an email. So, with all that being said, floor is open. You guys can come off mute, type it in the chat. Literally doesn't matter, and we'll get started. Oh, I guess everybody has a little cold feet. Nick, if you want, we can go over like getting into trades and stuff like that.
There we go. I didn't know where everybody's at right now, so I wasn't trying to start at the at the level one. But if that's all right, yes.
It's all good. And so yeah, is it more so when we were talking before, is it like how to actually enter the trade when you have the setup or whatever it is that you're looking at?
Right. Like I have like I got the strat, all the different setups and whatnot, and all that printout. So I understand that portion. It's more so like going on Thinkorswim and like because I'm watching the videos on Thinkorswim, but it's actually like going in and saying, all right, I want it at this price, on this day, and then with this stop right at this point. That's the part that kind of just it gets me. I understand it, but actually putting in the trade and Thinkorswim is the tough part for me.
In the sense of like when you're ready to buy the option, like how do I actually buy the option, all that stuff, right?
Yes,
Gotcha. Do you input your trades on your phone or on your computer? Because we
I'm
can go over both.
on my computer.
Gotcha. All right, so let's go to the trade tab. So when we have Thinkorswim open, go to the trade tab on the top left. And what we're going to be doing is let's look for, I don't know, let's just say we're looking at Tesla. When you open it up, it's going to have the option chain here. This is all the expiration dates. The parentheses is just how many days till expiration. So the 5 in this case would be 5 days till expiration, 12, 19, so on and so forth. All the ones that are in gray, those are the monthly expirations, meaning those are like the major ones that people usually get. The yellow ones are kind of just like the in-between month expirations. As we can see for June and onward, there's only the monthly contracts because the in-between weeks haven't generated yet. So we only have these like weekly contracts. These will be the monthlies in gray. Um, and to actually see the option, the strike prices, all that stuff, we can just click on the line or the little arrow and it'll expand everything. Now, when we have it expanded, generally I don't have all the strikes because you're going to be scrolling for hours, of course, being dramatic, but usually I have like an 8 or 10, depending on what you're trading. So in this case, let's go back to the chart real quick so we can pretend we're looking at a trade. So this is Tesla on the 4-hour time frame with the 2-1 setup. Let's say we're going to buy calls after it triggers above this price. So let's create an alert. So we have an alert there, so it tells us, when the price is going to trigger for a long trade. So if we're going to be looking to take a long, we're going to be looking at the calls, which are going to be on the left side here. Now, if you're missing any one of these columns, make sure that where it says layout, you can click on that and you can customize it and you can add in different columns that you may want. For me, all I really look at are these. I don't necessarily care for the other ones that are not here, but these are the ones that I have: delta, gamma, theta, implied volatility or IV, open interest, the last price, and the Vega. So let's say we're looking to actually get into the trade. Let's say we're going to be looking to buy the 172 strike call, which again is on the left side, and puts are on the right side. You do not want to buy puts when you're meaning to buy calls. So make sure you are on the right side of the screen. So after you're highlighted over the call that you're looking at, you're just gonna, if you're using a mouse, just right click and then you can buy. And these are the different strategies. If you have a cash account, more than likely it's only going to be a single. Um, you can buy custom, so you can open up the trade immediately with a stop order with it, and you can customize that at the same time. Generally, what I do just for quickness, I just buy the contract by itself, and then I go into it and edit like the take profits and stop loss and stuff like that. And we'll go through an example in a bit. Let's see. Let's say, so once you hit buy, it's going to bring up this specific order right here where it has the trade that we're looking at, the call, the strike price, expiration date, the ticker, and this is the price of the stock. I mean, sorry, the price of the contract. Now, let's unlock that. Now, the order type is going to be right here where it says limit. If you want to just buy market to just get in immediately, make sure that's on market. Just keep in mind that if the market just opens, it might be a little volatile. So you might get hit with a little bit of slippage. You know what slippage is, right?
Yep. Nope. Keep going.
Cool. So you do know what slippage is.
No, no, that's
Oh, cool. So slippage is essentially, let's just say, as we can see here, the the ask price is 3.45. So if I buy market right now, and let's say that changed from 3.45 to like 3.55, I'm taking that 5 or 10 hit with the slippage, because instead of filling me at 3.45, price moves so fast and the market is going to fill me at the next best available price, which in this case would be 3.50 or 3.55 or whatever it may be at the time. So generally, if the spread isn't that crazy, I don't mind buying market personally. Um, Otherwise, I'm just doing a limit order. And a limit order is going to get you at the exact price that you tell the system to get you in at or better. So let's say, for the sake of the conversation, in this exact same scenario where we're going to be buying calls to get into this trade, let's say the current price is 3.45 and then the bid is 335 and I want to get in the middle at 3.40. So I'll have my price set to 3.40. Now let's say right as I'm hitting confirm and send, the price goes down for the contract and the ask is 3.30. It'll fill me at 3.30 because I wanted it at 3.40 or better, which was less than that price. And essentially, you just confirm and send that through, and then that's it. From there, once it's in, you can go to your monitor tab, and it'll be in your position section, which you can find here. And then from there, you can go back and edit it and add a stop loss order if you want to. If you did want to do everything in one screen, assuming you actually have time to do it, depending on how quick the market is, you can do, I don't really do this often, like I mentioned, since I just get in and then I go back in. Let's say I want to create a duplicate order. I think it's duplicate. No, whoops. Need to do, let's do buy custom with stop. So now it has the stop order and my buy order that I have here. So now let's say based on whatever you calculated on the chart, your stop loss is going to be 3. And then you just confirm and send that. And now it has your stop loss already set. And then it has your buy-in price. And then you just wait to get filled in. And then once that happens, and you're into the trade, you can always go back and edit the specific stop loss order. Let's say the price is at 4.00 and you want to move your stop up to, let's say, 3.75. You could do that, send the revision, and then you'll be good to go.
Hey,
I know I
Des,
talked like 10 minutes straight, so any questions, let me
no,
know.
no, you're good. This is great. Des, is there any symbology on the actual chart that shows you where your trade is, or you always have to go to this the monitor portion to say, this is what trade you currently have open?
It'll show you on the chart like where your trade is roughly. So similar to where it has like mark, this is my alert, it'll have like an order around that price for the option.
Okay.
Make sense? Any questions?
No, I'm good.
Cool. Usually, being transparent, when I first started trading, I only had one screen and then my phone. So literally, I just get into my trades on my phone. I'm just a lot faster with it just because I'm used to it. Um, Personally, for me, it's a little clunky when I'm using this. So I just do it on my phone. You can also use Active Trader to buy options. I personally don't really use Active Trader for options. Um, when I'm using it. I'll send you a video that one of my mentors, Trust My Levels, did for Thinkorswim. He literally like it's a 3 hour video, goes into everything for Thinkorswim. And he mentions using Active Trader for options. So you can get in a lot faster and it actually gives you everything like on the screen that pops up here. Again, like I mentioned, since I'm mainly just using my phone, that's just the way I do it. And that's what I'm used to.
Is the phone pretty similar as well? Not, I mean, not, you don't have to necessarily go on if it's not accessible, but is it similar to the laptop platform?
To me, it's a lot easier. Let me show you guys. Let me just get my wire real quick. Yeah, for me, it's always been a lot easier to get into the trade. Give me one sec. Let me hook this up. Oh, Janice, I just saw your questions. I'll go over them right after I'm done with the mobile section. You guys can see my screen?
Yes.
Sweet. So let's say, so when you bring up the app, you could go to positions, literally whatever you want. On the top right, click the little search icon or magnifying glass. I already have Tesla up, so we'll just click on options chain. And then we're going to be at the options. Let's change that to 10 strikes so it's not crazy. And then we just click on this right here. And then this is the buy screen. To me, it's a lot faster than this because I already have it ready to go while the chart is up. But again, personal preference. Now, similar to here, when you hit limit, it'll bring up the different types of orders. Now, also something to pay attention to. Granted, most of us are going to be using cash accounts, so this isn't really it's going to apply to us. But be very mindful for those who may use margin. Right here, where it says to open, this is very important. What you don't want is where to say sell to open because you're going to be selling the contract and not buying it. And selling a call is a bearish trade. But we'll go over that another time. So anyway, going back to this, let me just real quick. So yeah, pretty straightforward. Once you put the price that you want, hit review, and then Literally just buy whatever send the contract that you want. What I like to do is once I'm in the review screen for whatever it may be, I could just save on the bottom left where it says save. That way, now in my saved section on the app, it has my contract ready to go. So I don't need to fumble back in, look up Tesla, go to the option chain. It's there ready to go. So I hit saved and then the trade is there. If I want to edit it to adjust whatever happened, pre-market or open, I can just edit it really quickly and then send it over and then I'm done. So you're ready to go once the market opens. Now, let's say you want to set up get into the trade and set a stop loss at the same time. We're going to go ahead and hit more on the bottom left, create advanced order. And then we have the buy on the top. And then let's say I just want to open up a stop order with that. Let's do stop. And of course, it's going to be under the price that we're getting into. Done. So now I have my entry where I want to buy it at. And then I have my stop loss set at the same time. Now, let's say you don't even want to babysit the trade at all. You can also open up a take profit order. So now I have my entry price, I have my stop loss, and I have my take profit. Then I just review the order, send it through, and that's it. I don't have to do anything anymore. The system will get me in or out, or sorry, the system will get me out of the trade, either in profit or at a loss by itself.
How is a stop loss different than a take profit?
So a stop loss can be a stop loss in profit. But more so the take profit order is different because let me clean all these lines up. As we can see here, the second order is our stop. So if price hits 3.00, it's going to kick us out of the trade at a loss of $45, comparing these two. Now, if the price hits 445, $100 gain, it's going to get us out at a $100 gain, and it's going to cancel this order here. So this will be the take profit order, and this will be the stop loss order. Does that make sense?
Yes.
Cool. Little
Can
con
can you do the first order? Can you do it without the second? Can you just always do the first, the first play and then have that take profit as well too?
So let's say like if I don't want the stop loss, I only want the take profit.
Yes.
Yeah. So in this case, we would just go here. You just hard press and then it'll like start shaking, just delete it. But in this case, if I only want to take profit and I don't have want a stop loss, which I would never recommend.
Okay. Okay.
Um,
They don't even we don't even got you.
so right here has my entry and then my take profit. The reason I say that is because you can use like a mental stop loss. Um, but if you're not like disciplined enough to actually get out when your alert goes off, it's good to have a hard stop loss. And Janice, yes, you can add a trailing stop. So if I go here, let's say on this is going to be my stop loss order, I would do a trail stop, and then I would just set the settings accordingly, and then done. And now I have my trail stop, and then my take profit order all at the same time. Is there a way to see a correlation between the contract price and the stock price? Yes. The way I do it is just like, uh, let me let me do this real quick. And let's go back to the big screen. So in the sense of correlating the stock price with the option price, you can always use the analyze tab and you can analyze like, what the price of the stock. Let's do single and don't want to buy 100 shares. It should be, I think, in the risk profile. I think using this, it can calculate like what the stock price would be compared to the like and how much the contract will be worth. I've used this probably like twice in my entire Thinkorswim career. I mainly use the one on Webull, which to me is a lot easier to use. Granted, I'm sure this will be easier if I actually learn to use it. Um, and the reason why I don't really care to learn it is because I just kind of do the math really, really quick in my head, really quick in my head. So for the sake of the conversation, let's say you have Tesla here. Once it hits, and I'll try to keep this simple so the math will be easy. As we know, for every dollar that Tesla goes for or against us, we're going to make or lose $48 on this specific contract. So if my entry is at 171.85, and let's just say that my first take profit level, again, to just keep math simple, is going to be $1 away, I can assume that going back to the contract, if I pay 3.40 for it, if it goes $1 in my favor, it's going to add $48. Now, if the contract is in the money, it's probably going to be more than $48. But again, to keep math simple, if we entered at 3.40 and then it went up $1, we're going to add 48 cents to our contract, or $48, which will be 3.88. So when it hits that first target, we will assume that we should at least hit 3.88 on the contract value. So if you wanted to, you can just set a sell limit at that price on the contract for one of the targets. If you have only, one or two contracts, you can set it for one, so that first one gets off automatically. And then the second one you can, fiddle with manually. Did that make sense? How to correlate the stock price and the contract price?
Yes.
Cool.
Thank
Yeah, I'll say definitely mess with the analyze tab, so you can see it in real time. To me, it's kind of just it's slow, when it's like in the moment. So I just do the math quickly in my head. Again, just years of doing it is just easy now, that you can just quickly calculate it. But the analyze tab is also good to determine, at this price, what is the contract going to be worth? So you have an idea of how much it'll be worth. But if it works better to do it quickly, how I do it, just in my head doing quick math, that would work too. And it'll be approximate, because remember, at the first target, it'll be in the money at 172.83 because we're choosing the 172.50 strike. So a lot of the gamma is going to be added to the contract as it goes in our favor. And the delta will increase as well, which will maybe make it even more than $49 when it's the first target. But again, really depends on what's going on that day. Cool. All right. Let me go back to your first questions. Before I go to the next questions, did all that make sense? Do you ever have any questions on that?
That makes sense.
Cool. For someone who gets anxious in trades, how would you recommend that someone calms themselves to stay in plays? Oh, I love this one. So as always, you want to use breathing practices to slow down your mental, your emotional reaction to what's going on in the chart. Um, Besides that, I always recommend people to, set your alerts and go do something else. Because once you're in the trade, your job is done. Doesn't matter how much you look at it, it's not going to make it go faster to the take profit. It's not going to make it go faster to the stop loss. Also, if your platform lets you, hide your P&L because you don't want to get triggered by the money. Remember, it's not about the money, even though, of course, we're here to make money. But as Randy Howell said when I worked with him, it's like, we have to develop the trader's mind. you know? Professional traders aren't looking at their P&L, wondering, should I get out or should I stay in? Whatever it may be. Or they're looking at the charts. The charts are telling them to stay in or to get out. If it hasn't hit my take profit, if it hasn't hit my stop loss, I have no business staring at the chart. That's just pointless and just wasting that mental energy and getting you triggered, which will mess you up. Because what you don't want, which again has happened to me plenty of times, is you'll look at the trade and it's kind of just hanging out, not really doing much. And you may be like, oh, well, I'm up $20 or 20%, whatever it may be. Let me get out before it turns red. And then you get out for 20% and it goes 100% and hits all your targets. And then you're like, all right. And then you're annoyed at yourself. So once you get into your trades, set your alerts, go do something else, go turn the screen off, and just, let the market do its thing. You did your job. Um, Now, on top of those things, of course, um, as always, this is like a habit that needs to be formed and a discipline because if you're used to getting out of trades early, um, and really just like, making silly mistakes or having all these bad habits in your trading, it's easy to continue with the same habits that you've built. So now it's really just building the good ones. And over time, it gets easier. Like when I was having trouble, like as soon as I get into a trade, I will immediately start panicking. And it wasn't, until like I literally just started doing those things. All right, let me do my breathing practices. My alerts are set. Let me go look out the window or go do something else because it doesn't matter once I'm in it. Yeah, I did my part. And then over time, I wouldn't say that you stop caring. It just gets easier in the sense of you already know what to expect from the market and what to do and what not to do. Now, of course, I'm human. Sometimes I still get emotional. And I already know that once that happens, I go do something else. Because if I stay at the chart, I know I'm going to mess myself up. Um, that's why, like, having, like, automating the system, how I showed you guys earlier, where you take profit and stop loss all in one shot, that leaves me to do nothing on my end. I just put my orders in and, go do something else and just let it be. Let me know if that answered your question, because if you let me, I'm gonna keep on talking for like 3 hours.
No, that's good. Thank you.
Of course. And again, always have like those talks with yourself, you know, uh as humans, as always, like we've discussed before, we're not built for uncertain situations. And all the market is full of uncertainty and probability. Our human mind was not designed to thrive in an uncertain situation. If we're hanging out in the caveman days and there's a bush that shakes, we're not going to be like, oh, yeah, it might be a squirrel. We're good. Now we're going to run because it might be a bear. It might be a saber-toothed tiger. It might be a whole bunch of stuff that's going to eat us. So immediately our brain kicks into fight or flight. That's exactly what happens with trading because we're trading with our livelihood, which is money. We're trading with our food, and really, it could be life or death. That's the way our brain interprets this when we're doing that. So you have to slowly build, as Randy calls it, the trader's mind, and get out of our brain, our human brain likes certainty. The trader's mind works in probabilities, and that's the way it is when it comes to trading. All right, I'm gonna stop going off on a tangent there. Uh, any other questions? Shania, hopefully I'm pronouncing your name correctly. Um, any questions that you've had? Type it in the chat or come off mute, whatever you'd like. Eh, that's all good. You can mute yourself after you ask the question, or you could just type it in the chat, whatever you prefer.
Okay, no, I can unmute. Hopefully they just walk away. But my biggest, like, so I think what you just said was helpful for me because my biggest problem is that never stay in the trade long enough. Like I don't know. I feel like I'm like struggling with that, and I don't know like the best way to maybe like get ahead of that, or what should I be journaling about that to like try. I'm so glad they went in the other room. To like try to get ahead of that. Like I've been trading for a couple years now, and like that's just my biggest hurdle. Like I just keep losing more money, and every single day I have the same story. I got out and then it went 1,000,000%. Like, that's my trading journey every single day.
What specifically, walk me through one of your trades this week so I can go through it with you.
Okay. So let's see. Oh, here's a perfect one. So I got into SPY this week on let me see what day that was. Let me see. I want to say it was Thursday. It was Thursday. I would believe it was Thursday, and it hit the previous day low.
Yep, this was Thursday right here. It did a 2 down and then it went 3 up.
Yes, so it hit a previous day low. I had the Lux Algo indicator on. So it was showing me that it was at a discount there. It hit the previous day low. I'm like, okay, I see equal lows. And I'm like, all right, I'm gonna get a 1DTE and see if this can, I don't even, I'm trying to look at my journal to see. It was like 4 reasons why I said, okay, I think this is gonna, this chart looks to me like it's gonna go back up. And so I bought a 1DTE and I got into the trade, and I got out with like, I want to say like maybe 18 something percent, and then it just took off, and I was like, oh my God, why do I keep doing that? I just keep doing that. Like, and my target was the previous, I had 2 targets along the way, but my second target was the previous day's high, and it passed the target, and I was like, oh my God, why do I keep on doing this?
Yeah, you literally got at the daily low and then it just ripped from there.
Yeah, and I sat there almost the rest of the day just staring at it like, what the heck, Shanae? You do this every single day to yourself. Like, what is wrong with you?
Now, question for you, when you got into the trade, what were you doing that took you out?
Well, I have bad habits, so I was looking at my P&L. I was looking at it coming back down, and I was looking at it being like, dang, I was just up 190. Now I'm at 60. I'm getting out. Because I'll say like I'll say to myself, like, I can't let this green trade go red. I have to get out. I have to get out. And and I swear to you, it seems like every single time I get out, it'd be like 7 seconds later, it take off. And I'm like, if I would have stayed in, I would have been at $400, This is my dilemma. I kid you not, every single day.
So the biggest thing here, like I mentioned before, once you get into your trade, set an alert with whatever your stop loss is, and then set an alert to whatever your take profit is. Now, that's one thing that you can do. The
Mhm.
second thing, of course, hide your P&L because again, we're trading the charts, we're not trading our P&L.
Right.
Something that you mentioned, not letting this green go red. The way I like to decipher that is I don't really trade like ICT stuff when it comes to like options. I mainly
Mhm.
do that for futures. But let's just say that you got in, let's see, let me get my little marker back out. So let's say you got in down here, which I
Mhm.
think you pretty much you
Yes,
should. I got on
yes,
a good candle.
I got in. I saw it was a hammer off of a demand zone. I saw like it hit equal lows. I'm like, oh yes, this is going up. I'm getting it, and no, and I got out.
So in this case, this is what I would do. Let's say our entry is here. Is where we got in. Just sort of, just putting a random line there.
Mhm.
Actually, let me bring up trading view so it'll be a little easier to follow.
Okay.
Uh, let's these lines real quick. And we were on SPY. And let's just go back to the 15-minute. And that was on Thursday. So we were looking at Thursday. Yep. So we're looking at this. So this box is Thursday. So you got in down here. So your entry is here.
Mm-hmm.
And then let's just say that your stop loss was down here, whatever that may be. Obviously, I'm just making one up because I don't know what your stop loss was. Where was your target?
My target was
Is they high?
yeah.
Cool. Which would have been right here.
Mm-hmm.
Target. Do you have a second target?
I did have second target, but I don't recall where it was. But I remember my first target was previous day high, or the daily high.
Gotcha. So just for the sake of the conversation, let's just pretend that this gap being filled is target 2.
Okay.
So when I say never let a green trade go red, what I do is this. As soon as again, you set your alerts, go do something else. Don't look at the chart because you don't want to spook yourself out. Once you get into that trade, you set your alerts at your targets. It's target 2. Once it hits target 1, if I have 2 contracts, I'm gonna take one of them off at target 1, and I'm gonna move my stop loss a little bit above from where I entered in. So no matter what, if it comes back against me, I'm making money on that trade. It's a risk-free trade, as they say. That is what I would say, not letting a winning position go red. And then when it's target 2, if it hasn't come back to entry, then you take your second contract off, take your money, and you go home. Done deal. Now, shout out to you ICT traders because y'all be holding $4 or $5 moves. I'll probably take profit every $2-3 on SPY, depending what
Well,
I'm
see,
looking at.
I can't even call myself ICT trader because I never stay in a trade longer. I don't stay in a trade. I can't. I just don't. I'm like stuck in my way.
I had the same issue. The biggest thing that helped is really just setting my alerts and not looking at the charts. Something that you can check as well, besides when you get like that fight or flight response, when you start getting on tilt,
Mhm.
notice any physical responses that you may have, like physiological responses that you may
Oh,
have.
I have them. I start getting hot. I'm starting to sweat. I'm like, oh my God. I'm like I'm home with a 1-year-old and I'm like, oh my God, if he doesn't stop crying, I'm like, I'm so antsy. Oh, I have physiological responses for sure.
So that can be a sign for you to step away from the screen before you go full tilt and start messing with the trade before it even panned out properly.
And I hear that. I think my problem is that I don't trust my analysis. So I'm like, well, dang, what if there was a target in between and then it hits that target and then it goes the other way and I could have took a green trade, I'm taking a red trade. So like it's like internal battle with myself because I one of my biggest problems is that I don't trust what I see on the chart.
Have you back tested all of your setups?
I have. So like my favorite setup is a 132 on a 132 and a 312. And I'll look at multi-time frame analysis to see where like this time frame is saying this time frame is saying this, I'll so and it typically does reach my target. I feel like these last couple weeks has been like a blow to my confidence even more because the market has been like so wonky and it's just I don't know.
So, second question for you. How often does that trade win? Let's say out of 10 times, how often does it win? Or at least hit for target 1?
Me or my back testing?
The back testing.
the back testing at least 7 times out of
Cool.
10.
So
Not
with
so
that,
much.
we can understand that 7 out of 10 times you're going to win that trade. Losses are going to be expected because even my best setups lose. It is what it is.
Mhm.
Um, so in your case, probability is on your side. The biggest thing here is getting out of your own way and
Mhm.
actually letting the trades do their thing.
Okay.
Now, what I would say for you to try this week, once you get in a trade, set your alerts and just go do like one contract.
Mhm.
Or you can, I would say do one contract. Don't like size regularly how you normally would. Just do one contract. All you're gonna do the next week or two is just work on that habit of taking profit when it hits your
Target.
target or getting stopped out if it goes against you.
Okay.
Once you get into a trade, do not look at your chart at all. Set your alerts, go do something else.
Oof. That just made me get hot. You saying that? I just don't look at my chart. Oh my God.
And again, that's a normal response because our brain does not like uncertainty. If you're like, not saying you are, just like in general, if like, humans, we like to control things because again, we don't like uncertainty. If we can control, like, all right, at least I'm looking at the chart so I can control the trade. You can't control the trade. That's an illusion. You can mess yourself up out of a trade, definitely, but you can't control a trade. Once you get in, you have zero control. It's up to the market after that. And you have to let the market do its thing. Clearly, probability is on your side. All you need to do, again, is get out of your own way and let the market do its thing. You're going to win 7 out of 10 times.
Okay. I'm gonna try that this week. Now, so I guess a follow-up question would be as far as my stops, like I keep going back and forth between like a 30% stop or 50% of the invalidation level. And then so I would prefer a 30% stop, but when I back test, it seems like the invalidation level works better, but I experience more of a drawdown going back, using the 50% of the invalidation level.
So when it comes to the stop loss, it really depends on your setup.
Mhm.
Now, for me personally, when I'm getting into a trade, if it'll exceed more than 50%, I mean 30% loss, I do not take the trade. I leave it alone. I'll
Okay.
just wait for another setup. Because for me, that's my personal rule. If the trade is going to go more than 30% loss, I will not touch it. I will gladly wait another day, even if
Okay.
it's my targets that day. Again, it is what it is. Um, so in your case, if the 50% level would hit you for more than 30% loss, um, you really have to, in this case, just sit with yourself, are you okay with taking a 40% loss on a trade or 50% loss on the trade? One thing that I would make note of is different setups that I use have different stop losses. So obviously with the strat, our stop loss is going to be different almost every single trade because, let's say we took this 2 down from the shooter, the
Mhm.
trigger candle was up here. So our stop loss is going to be, in this case, $1.50 or yeah, $1.50.
Mm.
Now, let's say we took this 2 down, this big one. Our
Yeah.
stop loss from entry would only be almost $1.
Mm.
So
Mhm.
of course, is going to fluctuate. But that's where you can just quickly calculate when you get into the trade. All right, or have an idea. All right, we're looking at SPY right now. Let's say as an example, if it goes against us, it'll be $1 loss on the price of SPY. And let's go to one of SPY's contracts to get an idea. Let's look at 1 DTE for the put side. Let's say we're going to get in a 512 if it goes $1 against us, that's 48 bucks. Let's say we get in at 2.80 just to keep math simple. That'll be two, was that 40? Yeah, 232 if my math doesn't suck right now, which will be what percent loss? 2.80 times, what's that? 43. That's about 17% loss if my math isn't sucking right now. 15 to 20% loss. So I would take that trade. It's within my risk tolerance.
Okay.
Now, if the setup is good, but the stop loss is a little wider than I would like, I'll just size down. I usually put 10% of my account in every single trade. And like I mentioned, if it's more than 30%, I won't take it because that'll lose me 3% or more of my account if I let it go more than 30%.
Okay.
So in that case, the maximum I'll take is 3% loss, which if you want to put it into like, um, the amount of trades for your account blows up. I have 33 trades until my account blows up. Of course, that's impossible because with proper risk management and only taking your best setups, you will always come out on top. And of course, following your trade plan and not getting out early.
Yeah. Okay. I'm gonna try that this week. Thank you. That's definitely really helpful.
Definitely. And message me with your results at the end of the week.
I will.
And
Thank you.
again, I'm gonna tell you right now, when you get into that trade, those emotions are gonna start flying because that's what your body's used to. As soon as you get into the trade, set your alerts and go do something else. Wait until your alerts go off and then go, take some profit off or whatever it may be.
Okay. Thank you.
Of course. Um, any other questions?
There's a question for you.
Yep.
Is it more important to memorize the combos or understand what the combos are, what's happening in the market?
I would say understanding what's happening in the market. The combos are kind of just there to give us an idea of like, when to get in, when to get out, stuff like that. Um, you may want to look at it in the sense of, what is this telling me? Like, um, let's say for the sake of the conversation, um, after this big drop, this is the 4-hour time frame. And as we know, 2 4-hour candles make a daily chart. So we have this high to this low. That's the daily chart for Thursday. So we were inside back to back almost consecutively until Tuesday, I believe, which finally broke it to the, yep. Yeah. So because of that big bar here, that formed a 3 bar on the daily, and then you might hear some people say like, mother bar issues, which means like a 3 bar issue where the range was so big that now you're kind of just stuck in sideways movement. So you're kind of like back to back inside bar until finally Tuesday of this past week, we had a bigger range expansion. And we had a lot of news this week, so that affected it as well. But yeah, I would say more so the candles are there to give us an idea of what's going on. Like if it's a daily candle and it's inside, I'll probably be hesitant to take any trades because I don't want to get stuck in chop. Like whoever traded on Monday, let's go to the 4-hour. Almost nothing happened. That was what, like a $2 move all day. Yeah, like a $2.50 move all day. If you weren't getting in and out, you're just stuck in chop. Hopefully that answered your question.
Does it does. What does journaling look like for you?
Journaling? Ooh, great question. We'll go over that. Let me bring up my template. Samia, if I'm pronouncing that correctly, welcome. After I go over this, any questions you have, we can definitely go over. All right, let's look for our Trading journal template. So this is what I journal when I'm journaling my trades. Don't feel the need to write everything down. I can send you a copy of this if you'd like. Just message me on Discord when you can, so I can remind myself to send it to you. And whoever wants it, message me on Discord as well, so I can send it to you as well. But we'll go over the list here. So you can either write write everything down physically in a journal if you want. I use TraderSync and I just upload all my trades and then I just type everything in the notes section. It has most of these things added in, like, the date, how much you made, what you traded, the time of day, etc. But anyway, going back to this, the day and the date is obviously important because we need to know, what is our profitable day? What is the days or day that we make most of our money? Looking at my journal, apparently I make the most money on Monday and I make the least amount of money on Friday. Now, with that information, what can we surmise? What can we get from that? What I got from that is that towards the beginning of the week, I'm locked in, I'm ready to go. Towards the end of the week, I'm a little burnt out. So I may not want to trade Fridays at all, or I may want to size down on Friday. So if I do have a red day, it's a small one as opposed to a normal size one. Now, of course, my profits will also be minimized, but that's okay. Seeing with the history of my journaling, Fridays usually are not my best days, apparently. And then, of course, how much you made or lost that day. This is important, your ticker and instrument that you traded. We need to figure out what works for you and what doesn't work for you. For example, let's say you trade Apple SPY, which is kind of the same thing. But let's say you trade Apple SPY and, I don't know, Meta, let's say. And out of all the trades, most of your money comes from SPY, a little bit from Apple, and you're usually ending red on Meta. So that can tell you, all right, let me not trade Meta anymore and only focus on SPY and Apple, where I'm actually making money. That way you can capitalize on what's working and minimizing what doesn't work. And instrument, that'll be like, options, crypto, futures, etc. Like for me, most of my money comes from futures, although I still trade options basically on a daily basis. I also trade crypto futures here and there, not too much, because when I trade crypto futures a lot, my sleep gets messed up because I might wake up in the middle of the night and be like, "Ooh, let me see what Bitcoin's doing," and then it messes me up for the New York session when I wake up later on. So I try to keep that to a minimum. Of course, the time of trade, that's important because we need to figure out what is our most profitable time of the day. Based on my journaling, most of the money that I make is in the morning time. In the afternoon, if I trade, I'm either losing trades or I'm making a little bit of money. And personally, it's not worth it for me to waste that mental energy trading the afternoon. So by 12 noon Eastern, everything's shut down. I'll probably look at the chart because, I have my own group that, they talk and stuff like that, and also in Hungry's group and things like that. But generally, I stop trading after 12. The same way we want to protect our money, our capital, we want to protect our mental capital. And the more you trade or the more time you're on the chart does not equal more money. I'll tell you that right now, because the more time you're on it, the more energy you're going to waste and you're going to be more prone to make mistakes. Everything makes sense before I continue?
Yep, we're good.
Cool. And then, of course, the time frame the trade was taken on. This is important because we need to determine what are our most profitable time frames and which ones work for us, which ones don't work for us. For me, when I'm day trading, I almost exclusively use the 4-hour and the daily for entries. And then the 5 and 15 minute, I only go on those to look for TTOs, and that's it. I don't really sway from that. Again, you want to keep your trading as simple as possible. You do not want to overcomplicate it. If you make trading simple, it'll be simple. If you make it hard, it'll be hard. Next part, the reason why you took the trade. Let's say how Shania was saying, equal lows, demand zone, all that stuff. What was your confluence? What was the reason that you got into the trade? Number 7, that people tend to not do. How did you feel before, during, and after the trade? That's going to tell you a lot about things that you need to work on. I used to wake up literally like at 9:30 when market open and then like wonder, why am I not making any money? And then I'll be mad because I lost money and then I'll revenge trade and then get messed up there. So you always want to add this so you can find out your bad habits and even good habits and, work on the bad ones and then improve on the good ones. And then, of course, what type of trade was it? Was it a reversal, breakout, scalp, day trade, swing, etc. That way we can determine which trades work best for us. For me, I mainly trade reversals. I don't really care for continuations unless it's a Momo hammer or a Momo shooter setup. Otherwise, I'm just taking reversals personally. Um, I would take like continuations if it's like like on a 4 hour or daily trigger. But if it's on a lower time frame, I don't really care to take continuations, mainly just looking for reversals. And then of course, just a note section, just type in literally all of this stuff. Um, I won't really go into that. I'll just send it to you guys, whoever messaged me, so I'll send you this and you have a little reference there. Hopefully that
Appreciate
answered the journal question.
it. Yeah.
Also, for those in a Hungry's group, um, I think her name is Ashley. She posted this. This is a fantastic journal prompt with your performance review. Has all these great questions to ask yourself. Highly, highly recommend. She posted it in the futures chat. So just skim through that. It should be in like the last, you should probably scroll for like a minute, maybe less, and you'll see this that she posted. I think she posted it on Friday or Saturday. Highly recommend. Really, really, really good. I had to save a copy myself because she has really great questions in there. Cool. Any other questions that y'all may have? Samia, I see you came in late. Anything you want to go over? Or Samaya, again, I don't know how to pronounce her name. Please correct me. Which one is the correct pronunciation? Samia. All right, perfect. Cool. Any questions that you have? Anything you want to go over? You can come off mute. You can type it on the chat, whatever you prefer.
She's messaging, but she messaged me by accident.
Oh, she probably has it set to got it.
There he goes.
Just now learning the strat, so wanted to listen in. Gotcha. Well, we're near the end, so um I'll probably be here for another 10 minutes. Anything else that you guys want to go over? If you do want, I can go into like a quick intro of the strat. Um, so I hold these classes once a month, every second Sunday of the month, just to keep it uniform. I used to do it like, the second, the third, the first, the fourth. But this just keeps it easy to follow for everybody. So every second Sunday of the month at 8 p.m. Eastern, I will always hold these classes. Unless something comes up, which I'll let you guys know and I'll reschedule it. But almost always, I have these every second Sunday. Sweet. But yeah, if you guys don't have any other questions, what was everybody's biggest takeaway from today's session?
Well, for me, I'm gonna trade one contract this week, and I'm gonna set my target, and I'm gonna set my stop loss, and I'm going to try to walk away.
Definitely. And again, I'm telling you now because I know exactly what that feeling is. When you get into the trade, it's still going to bubble up, but this is where the discipline is going to come. Do your alerts, close your chart, go I don't know, look at a bush or something outside. Do something else. Just don't look at the chart because you don't want to trigger yourself.
For me, it was a journaling portion. Um, probably my biggest part is to understand what we looking back at the stuff and keeping those journal entries. I do have just about some acronyms that you use, if that's all right.
Yeah, definitely.
ICT.
Gotcha. So ICT, that stands for Inner Circle Trader. Um, if I recall correctly, ICT is kind of just like he gets his trade models based off, um, like recurring market patterns. One thing that you'll learn as you start trading more, people will be like, oh, the market's random. The market is in fact not random, it's all programmed. Because, humans can't input millions of trades every 2 seconds. So they have all the hedge funds, all the big exchanges, they have computers trading for them. And those computers have to be programmed. That's why you'll see the same setups every single week in, week out. I'll give you an example. Let's go to QQQ.
Little tech stocks.
This is on the 5 minute to be specific. What does that look like? It might not be the cleanest, but what does that look like? Yep, looks like a W.
Double bottom.
Yeah, W, double bottom, all that stuff. This is on Tuesday, April. Let's keep on going back. What do we have right here?
Double bottom.
Yep. The market repeats the same setups every single week. All you need to do is know how to spot them and when to get in. Once you understand what they look like and what to do when they appear, you're set. That's why I always tell people the importance of having a playbook. The playbook will tell you the patterns that appear constantly, when to get in, when to get out, all that good stuff. I'll give you an example for the W trade model, as I call the W that I trade. I specifically look for this on the 5 minute time frame. You can look for it on the 15-minute time frame, but usually on the 5 minute time frame. Some setups will repeat every single day. It really depends on what's happening that week. So for the W trade model, this is what I look for. The step one is going to be a move from market open. So we're going to head down from market open and we're going to make a low of day. That's step one. Step two is we're going to retrace back up. And then, so that's step two, retrace up, make the center of the W. Step three, we're going to come back down and we're going to make a higher low right here. So instead of making a lower low and completing a new low of day, we make a higher low. What is that telling us? That's telling us that the buyers are stepping in and they are not letting price go lower. Now, all right, when are we going to get into this trade? Our entry is going to be once on the right side of the W, once we get that higher low, if it reverses to the upside, with the strat 2 down, 2 up reversal or bullish reversal. So our entry is right here. Our stop loss, you can put your stop loss in one of two places. Me personally, I like putting my stop loss down here at the low of day, because if it makes a new low of day, it completely invalidates this setup. Now, you can also put your stop loss on the bottom right if you want a little tighter stop loss. For me, I like to give a little more room and put it under the low of day. My first target is going to be the center of the W. My second target is going to be the completion of the W, which will be right here. So we enter in here. First target is $1, which will be a full delta, whatever that may be on the contract. Second one is going to be up here. Now, as you can see with the W, almost always we go crazy afterwards, almost every single time. Doesn't happen all the time, but a good amount of the time, it price just keeps on going and makes new high of day. So just with this specific pattern, you can look for every single week, you'll be profitable. Again, keep trading simple. Do not make it complicated. And to answer your question, Nick, in this way, with the strat and looking at the combinations, we can combine them with our trade models and use it and knowing when to get in or out of a trade. Now, I'll take it a step further for you guys. Let's just say you see the W and you missed the initial entry. You're like, all right, man, I wish I got in. Now I'm too late. In fact, you are not too late because we have a second entry. If you don't use fibs, this will be a good practice for fibs. What you're going to do is you're going to take the lowest point on the bottom of the W and before it reversed back up. And then you're going to get the highest point before it reversed back down strat-wise. So this low right here to this high right there. You can enter in once price hits. Let me turn on these levels. So you can enter in either on the 38 fib or the 50 fib. And as we can see here, came back down, wicked off perfectly off the 50 fib and kept on going up. So you could have entered in on this retracement on the 38 right there and, kept going higher. Granted, it did come back down, but it literally wicked off there, went up about, what's that, 438, 485? It went up about, what's that, like 60 cents, give or take?
Where would you put your stop loss there?
So this is the tricky part when it comes to options, since I only trade this setup on futures. For futures, I use points to stop me out. So if I'm looking at futures, my stop loss is going to be um like 20 points under whatever this price may be, or 15 points or whatever it may be. For options, I would say if you want to, you can have your stop loss down here, like on the bottom right of the W, depending on how far it is. And then from there, you can just continue taking it up. I'll give you another setup. Yeah, it's caught me in a good mood, clearly. Let's do Bitcoin. There's a trade I took. This trade solidified this trade model for me. Let's go to, so in the 5 minute, was it on the 5 minute? Let's see. It was when that big drop. Here we go. Cool, perfect. So I guess the official name for this trade setup is called the retracement setup. It can be on the long side or it can be on the short side. The specific model here is for the short side. What you're going to look for is a big drop, a doji to print in the middle of that drop, and then a big drop after that. Your entry point is going to be as soon as it hits the high of that doji. Your first target, I guess, is going to be the bottom of the doji or the completion. Actually, before I go into this, I got to tell you about the H pattern first. Let's go back to QQQ. The idea behind the W is, first I have to tell you guys, oh, you see QQQ? You see this right here? We're going to come back to that in a bit after I finish with Bitcoin. So let's look at really quickly. Let's trying to find a simple H pattern for you guys so this can make sense. All right, cool, perfect, right here. Let's go here and let's just highlight this section, specifically this. So as we can see here, market gap down, made a low of day, retraced up, but then it kept going down. It completed the lowercase h pattern once it broke that low. So something to keep in mind. That's the H pattern, which if you trade strat, is just a bearish TTO. It's just easier for me to see as an H as opposed to, it's a bearish TTO and stuff like that. Anyway, moving forward. So with the W, it's a failed H pattern turned into a W. So we come down, retrace up, come down to make the H. It fails, makes a higher low, goes up, turns into a W. So that's how you can make it make sense in your head. In the H pattern, sellers were strong. They kept on in the H pattern, the sellers were strong. They had a lot of strength, they sold it down. Thank you. They sold it down. So that the selling was strong there. Technically, you can see this as this is what I would consider a dirty W in the sense of it completed the H and then it went higher and completed a W later on. That'll be the dirty W. The highest probability version that I like to take is when it makes the higher low, because that's telling me that the buyers are present to take price higher and the sellers are weak. All right, going back to the other setup that I was telling you guys about. And let me come here since I'm going to reference this chart next. All right. Samia, one thing that I mentioned before you came in is if you make trading simple, it will be simple. If you make it complicated, it's going to be complicated. All right, let's look for that big drop. All right, so like I mentioned, entry is going to be, so before I even do that, let me just get these levels. So this will be entry, or short entry to be specific. Target 1 is going to be the completion. If I go on a lower time frame, this will be a cleaner H pattern. It's kind of just stuffed together because it's the 5-minute chart. But if you go on the 1 minute, let's look at the 1 minute and see what that looks like. Was it this day? No, that's something else. Yeah, so if you go on the 1 minute, it's a cleaner H pattern that we can see here. Anyway, going back to the 5-minute. So your entry is going to be when, like literally when it hits that wick, you're going to open up a short immediately. Your first target is going to be the bottom of the H, or in this case, just the bottom of that doji. And then your second target, it literally could be whatever you want. Depending what you're trading, you just have to like back test it and see the average amount that it moves in your direction. For example, when I'm trading futures on this specific setup for YM, my stop loss is 25 to 30 points, and my take profit, it almost always gives at least 30 to 50 points minimum, which for one contract, that's 150 to 250 for one contract. Maximum I've seen it about 100 points. That's about $500 for one contract. Anyway, this here is specifically for Bitcoin. So we have the retracement. Retracement just means, it's coming back up to a specific level. It's retracing back up to this area. We opened up our sell on this candle, and then it just got faded back down, as we can see. So if you were trading Bitcoin, our entry would have been here. Let's say average stop loss on this is $800. Let's do 800 here. And the average, let's say let's say 15, let's say 1600. So as we can see here, it only went against us by what, 360 bucks, 370, not bad. And then from there, it literally got faded to a maximum of about 3,000 bucks. So this trade, if you held it that long, would have been sitting beautifully. All right. Now let's go back to QQQ. And like I said, the market loves to repeat itself. Let's see what we have here. Big drop. It's not really a doji, but it's, you know, it's like kind of like it's like an even candle in that center point. Big drop. We're gonna open up our short as soon as it hits that center candle. Our first target is going to be the bottom, and then from there you can just take profit every dollar goes in your favor, or every 50 cents, whatever it may be. As you can see, it literally wicked you and got you in. It only went against you not even like 10 cents. And then it died $4, almost $4. So there's another setup that you guys can look for. Any questions? All right.
I have a quick question. What for options, I know you said you use Strat for options. What time frame do you prefer to take your setups on? If you're day trading.
If I'm day trading, I mainly use the 4 hour and the daily time frame.
Okay.
If I miss the initial setup or entry on the 4 hour or daily, like if it gaps up, I go on the 5 or 15 minute to look for a TTO, and that's
Okay.
it. That's all I do.
Okay, thank you.
You can use the 1 hour, 30 minute stuff like that. I used to do it like that, but since I mainly trade futures now, I don't babysit my options trades too much. So I just like to get on the 4 hour, you know, let it cook while I'm trading futures, since I trade that a little more aggressively.
Okay. And last question. Do you have a video on how to start with futures?
I have some on my YouTube, not necessarily like it's like little tips and stuff like that. I haven't made like a full-blown futures video. I'll probably add that to my list of things to do. Um, yeah, I'll add that to my list to do. I'll if I can, I'll release it this week or this upcoming weekend or the following one.
Okay, perfect. Thank you.
And any questions that you want answered in that video, please like message me so I know to go over it and not to forget.
Okay, I will. Thank you.
Of course. Most people I talk to lately are saying that they are switching to futures over options. Thoughts? Oh man, once you mess with futures, you'll probably never go back. Um, what I love about futures is that there's no theta. So let's actually, I wonder if they'll let me paper trade. Actually, no, what we're gonna do is, let me just restart Thinkorswim in paper mode because I'm not trading futures since the margin requirements are way too high there. Give me 1 sec. Let me get this set up real quick. Let's not turn off my computer. Give me 1 sec. Let me just log back in. But yeah, for futures, don't have to worry about theta. You can literally hold the contract or the position all day. If it doesn't hit your take profit or stop loss, doesn't matter. You'll only lose money when it goes against you or if it goes for you. And I'll show you guys an example. The biggest thing that confuses people when they first start trading futures, coming from options, they're like, where's the expiration date? Or what's this? Or what's that? There's none of that. Like, yeah, there's expiration dates for futures, but it's a lot simpler than you may think. But all you're really doing on futures is just going short or going long. That's it. give me 1 sec. I'm logging in here. All right, so let's bring up my chart. You guys can see my screen?
Yes.
I see it.
Cool. So for the sake of the example, I'm going to trade MES because that's what most people would start off on. So ES is the futures of the S&P 500. So categorically, it'll be ES futures on top, then SPX, the index, and then SPY. I'm not going to go too deep into it after that, but something good to know. So ES, and then there's MES. Usually the M in front of whatever you're trading futures wise is the micro version. It's worth 1/10 of the value, meaning for one ES contract, for every dollar or every point that it goes for or against me, I'm going to make $50 or I'm going to lose $50. So you can think of it like options brain wise. It's a contract with a fixed delta of 50 or 0.50. And then for MES, it's a fixed contract where you make $5 per contract that you have per point. So just for the sake of the example, we thinking to go long or short for this example? I don't know. I'm just asking you guys. Really doesn't matter.
Long.
All right, let's buy market. So as you can see, I'm long one contract at 5175.75. ES and MES move in increments of 25 cents. That's one tick value. A tick value, it really depends on what you're trading. For MES, every 25 cents, you make $1.25 or lose $1.25 for every tick. And there's 4 ticks in 1 point. So for every dollar that we make or lose, we make or lose $5 in total. As we can see here, we're down $5 because the price is down $1 from when we got in. Well, now it's coming back up. And that's futures. Like I can hold this position. So let's go back to, how do I bring up my position here? Give me a sec. Position indicator, bring that in there. Okay. And sir, working orders. Add that in. I already have that. Huh. Interesting. I have to mess with my paper trading side. So as we can see here, we are up $2.50 or almost $3 now. Well, we were up that amount because of what we entered in on. And that's basically it. That's futures. Super, super simple. If it takes 1 hour, let's say we want to take profit up here. What's that? $2 away. Let's sell. Let's set a sell limit. And then if it goes against us, let's do a stop order down here. Let me edit this. We'll do stop, send. Yep. So now I have my stop loss and my take profit. I can walk away and don't have to worry about this. With futures, you can lose more than you put in the sense of you're using margin. Futures does have expiration dates. I believe it's like every 3 months. Right now we are on I think the June contract, if I recall correctly. And that will expire in about 2 months from now. And then we'll go into I think the September or December contract, one of those. I always forget. But yeah, in this case, now I just wait until it stops me out or it hits profit. And that's literally it. What I personally trade is YM. For every tick, which is $1, we make um $5. So in this case, let's just sell short. So I'm short one contract. It's down, well, it was down $1 from my entry. Now I'm even, so um I'm up 2 points, so I'm up $10. YM moves the most out of all the indices. You can hold the position for months if you want. I do not recommend um holding or swinging futures at all. Like it's horrible. The contract cost depends on the broker that you're using. So Tradeovate has the least amount of um margin requirements. So if you want to buy, let's say, one MES contract, you need to at least have $50 in the account for one MES contract. Now, if I want to get out of the trade really quick, let me just flatten this and get out. And I made $20 in fake money. Awesome. So depending on the broker that you use, the margin requirements are different. I despise trading futures on Thinkorswim because the margin requirements are ridiculous, but I get it, you don't want people owing you a lot of money if they blow up accounts left and right. So on Thinkorswim, it'll tell you how much you need. So the initial margin, so I need $9,240 to buy one contract of YM. As we can see right here. Oh, whoops, I lost it. Right here, 9,240 for the initial margin. Now, let's say you want to buy MES. You need $1,298 on Thinkorswim or Schwab anyway. Now, a Tradeovate, you just need $50 to buy one MES contract. Generally, if you're going to do it on Tradeovate and you're just going to like get your feet wet, you could put like $200 in and just still only trade with one contract until you get the hang of it. With futures, there's you don't have to worry about like PDT rule. If you have less than 25,000, you can do 1,000 trades if you want in a day. There's no limit, so you can do as many trades as you want. One thing that I would make a note of though is the commission fees and the fees that you pay. I think on Thinkorswim, I think it's like $4.50 round trip, which is ridiculous. Oh, looks like my MES order from earlier got filled in profit. Cool. Thanks, guys. You made me $10 in fake money. I'll pay it forward with this extra time I'm with you guys here. Anyway, so you want to look at the commission, I mean the commission and the fee structure. Of course, you can reach out to Schwab to lower the amount of fees that you pay. Also, if any of you trade options with Thinkorswim and you have your account with Schwab or TD Ameritrade, call them up to lower your contract commission that you pay. If you have 65 cents, you can call them, be like, hey, can you lower it to 50 cents? Depending how much you trade, they'll lower it to 50 cents. Instead of paying 65 cents every contract, you only pay $50. I mean, 50 cents, not $50. What am I saying? But yeah, for futures, definitely, I think in Tradeovate, it's like $1.20 round trip for like buying and selling and like a micro contract. But they'll tell you on the website um how much the commissions are. I think for like a mini contract, which would be like ES, YM, NQ, like the main contracts, I think I pay like four $4.50 or $5, something for like $4 to $5, something in between there that I pay on Tradeovate. What you can also do, prop firms exist. I know me and 100K haven't done the future/prop firm class yet, but we'll get to that soon. Just waiting on him to set up a date where I'll go into more detail. But you can always use prop firms. It's a little bit amount of money in your end where you could pay like $50 and they'll give you like a 30, like a 40, like a 50K account, 25K account. Now, some people might be thinking, well, what do I lose if I blow the account? Like, why are they letting us trade with this much money? In reality, you're trading a demo account. You're not trading with their real money. So if you lose or blow the account, all you would lose is the money you paid for the contract. I mean, sorry, all the money you paid for the what do you call it? The account. So if you paid, let's say $50 for a 50K account and then you blew the account, then all you lose is the $50 that you paid. And then once you pass the challenge, then you can start getting actual payouts out of the funded account once you pass the challenge.
So
Right.
that's what that mean of having a funded account.
Yep. I'll show
So
you an example.
okay.
Let's go to Apex. That's the main one I use. I use FTMO as well, but so let's say here, let's zoom in here. So so this is 167 a month. They always have deals. I think they have 80% off right now. So that'll probably be like, I don't know, 20, $30 for a 25K account. Your goal is to make 1,500 without hitting the loss of 1,500. So you have to get the account to 26.5K. One very important thing to note, they give you 4 contracts maximum that you can buy. Just because they let you trade 4 contracts does not mean you should trade 4 contracts, and I'm going to show you why. Let's say we are trading everybody's favorite NQ, which I have divorced. So let's just buy 4 contracts. Let's edit this, and I want to buy 4 contracts. Let's look at my P&L up here at 4 contracts. For every point that NQ moves, that's $20 times 4. So for every point, that'll be $80. I think I went long on this specific trade. Now, of course, the market is moving slow because, it's after hours. Now, of course, cool, I made $160 super quick. But what I actually want to show you guys is the opposite side. How, while you can make money quick, it can go very south very fast. And of course, the trade wouldn't go against me when I want to show this example. Anyway, for the sake of time, basically, just because they allow you to trade 4 contracts does not mean you should trade 4 contracts. One thing I recommend you guys, if you do want to like mess around with prop firms, I made like a guide on passing prop firms on my YouTube. Check that out so you can go into you can get more details on what I mean. One like with position sizing, stuff like that. But yeah, just to go back to this, just because they give you 4 or 10 or 12 does not mean you should be doing that. Remember, the prop firms make money off people losing accounts and paying them those fees for the account. And trust me, a lot of people lose more than they win. There's somebody that I knew, he probably paid about $15,000 in accounts, never got one payout. You do not want to do that.
So once you reach that 1,500 goal, then you can take payouts out of that account?
No, so once you hit the 1,500, then they're gonna send you an email congratulating you, and then you're gonna
Oh,
pay.
that you can get an account.
Yeah, then you're gonna pay the activation fee. For the new account, I think it's like 140 to 160, depending on the size of the account you got. And it's a one-time fee, so you don't get charged monthly.
Okay.
And then from there, you start all over again. You have to hit 1,500 before you hit the loss. Once you hit 26,600, the loss stops following you. And
Okay.
then, you start getting payouts from there.
Wow.
But the minimum you need to hit is 26,500, and then you can withdraw minimum $500.
Okay. Thank you.
Of
Those
course.
are my questions for future. So you answer them all. So you don't have to do the video if you don't want to. Thank you.
No, I love this stuff. So, if you guys let me, it will be here until late, but I know everybody has a life and I gotta get some sleep. I don't function well when I don't sleep properly. All right. So I will forcefully end it there before we continue here for another extra hour. Um, Thank you all again for coming by. Again, I have this every second Sunday of every month, unless something happens and I have to reschedule. The replay will be on YouTube, so you can watch that there. And again, any questions at all, feel free to message me. Nick, hit me up for the template for the journal so I can send that to you on Discord. And whoever else wants it, I'll send it to you as well. Just message me on Discord so I can send that over. All right, I'm going to end this and get off now. Later, guys. Have a good
Appreciate you, brother. Thank you.
Bye bye.
night. Hey.